Good morning, good afternoon, good evening. From wherever you're watching the video from, you're very much welcome. My name is Jidobi Ngozika. I provide accounting tutorial for small businesses so that you can keep accurate record of your transaction and make lots of profits. So that is why we're in business, to make profits. So let's jump right into the video for today. So we're talking about purchase return daybook. But before I progress, I want to remind us of the reason why we're in business. We're in business because we want to make profit. That's the overall objective why you're in business, to make profit. And if you cannot keep accurate record of your transactions, of the numbers of the things you've purchased, you cannot be sure of how much profit you're making. You might be making sales, but are you making profit? That's the question. So for you to make profit, accuracy is very, very important. Record keeping is very, very important. If you buy goods worth 10,000 naira, for instance, and you don't have a record of how much you bought that product, and you sell below 10,000 naira, will you make profit? No. So you must keep accurate record of everything that has to do with your business. The stocks you've purchased, the price at which you purchased them from, then having added your margin to that figure, you will now get the sales price you want to sell that product. And even when calculating, you should be very, very careful to ensure you calculate properly. Because instead of typing maybe 9,000, you type 900 times 10. You have changed yourself. So accurate record keeping is very, 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 very important. You cannot do without it as a businessman. You must know how to calculate your figures. You must know how to record properly so that you can account and say, yes, I'm actually making profit. Not because I sell all my products means I've made profit. If, for instance, you sold all those products at below the cost price, have you made profit? No. But if you have a record of the transactions that the price you sold those products for, and you have calculated what is your intended margin, maybe 2,000 naira on top of every product you purchase for 9,000 naira, you will now sell at 11,000 naira. And then if you keep accurate record of all your stock, if for instance you have 5 products and you count and see that there are 5, you sell those 5, you now do 5 times 11. That'll give you how much? 55,000. But if you've not kept the stock accurately, and let's say you just bought 10 products and you did not count it to confirm it's 10, and then you want to sell to a customer now say give me 5 products, and instead of counting 5 you now count 6, you have made a loss of extra 11,000 naira. So accuracy is extremely important, and that leads me to what we have for today: purchase return daybook. Now, when you have purchased goods from your supplier, which is the goods you intend to sell to make profit, and you don't keep accurate record of it, you are already beginning to make a mistake. So if you purchase, say, 10,000 products, like using the instance of diaper, which is the very product I'm involved in. If you buy 10,000 diapers, for instance, and then out of those 10,000 diapers, 1,000 of them is bad, I cannot sell them. I cannot make profit from them. So why would I keep them? I would only return those products back to my supplier. That's the same thing to do. And I should keep a record of the product that I return back to them. I should be able to count them and say they are 1,000. Because that is money that I've spent. Mind you, with the purchase return daybook, you record products that were purchased on credit. So both your purchase return daybook and your sales return daybook are for products that were done on credit. Are we together? So you have not paid the supplier, but it is assumed that when you make money or when you get the money, you pay the supplier. So if I purchase the Pampers, 1,000 of them, or let me say 10,000 of them, at the price of say 10,000 naira, I purchased 10,000 Pampers at 10,000 naira. And I say, okay, my intended profit for every Pampers I sell is extra 2,000 naira. So I will sell at 12,000 naira. So 12,000 times 10,000 naira. That is my expected sales. Now out of these 10,000 products I have of Pampers, 1,000 of them is bad. So it means that I have 9,000 good Pampers for sale. The same thing to do is to record this 1,000 that is bad in a different book. And I'll call that book Purchase Return Day Book. In that book, I'll write the reason why I am returning those goods. It's either I notice that the flap is not flapping very well, or it's not sticking properly, or I notice that the weight of the pampers is very small. Maybe the quantity that's supposed to be in each pack is small. No customer will buy that product because the customer will end up returning that product. If I decide to keep those products in my store, I cannot sell those products except I want to sell at a loss. And no customer will want to even buy that product in the first instance. So I'll be occupying space. So how will I keep a product that will not sell in my shop? The best thing to do is to return it back to the supplier. I will say, Mr. Damu, this product you gave me a wonderful, but out of the 10,000, 1,000 of it are not good. I cannot sell them. So I will not pay you for them. And so my liability is going to reduce. Because if I were to pay Adamu 10,000 times 10,000, 1, 2, 3, 4, 5, 6, 7, 8. That is 8 zeros. 1, 2, 3, 4, 5, 6, 7, 8. That is 100 million for those pampers. I won't be owing him 100 million. I'll be owing him what? 90 million because I'm returning back 1,000. So I'll call Mr. Damu once I notice that the products are defective. Mr. Damu, thank you for the pampers you gave me, but out of them, 1,000 is very bad and I cannot sell them. So I'll be returning them back to you. Mr. Damu said, customer, why are you returning? Say, they are not good at all. When you see them, you see that they are very low quality. There are no pampers sufficient in each pampers. The flap are not flapping properly. And no customer will buy them. So you're going to deduct 1,000 naira from 1,000 pampers from the number of pampers that I'm owing you. So I'm owing you what? 9,000 worth of pampers times 10,000 naira for each pampers. It is not good to delay once you notice that the goods you purchase from your supplier are bad. No need to keep it and say later. No. Return them back to him as soon as possible, so that he would also return them back to whoever he bought it from. Because he might tell you, you didn't return it back on time. You've kept it for too long, I cannot take it back. You have just incurred a loss. A loss of 1,000 pampers times 10,000. That's how much? 1,000 times 10,000. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. It made a loss of 10 million naira. So I return those pampers to Adamu as soon as possible. Are we together? So that is how you return your goods. You don't delay them. Once you notice the defect, you return them instantly to avoid your supplier from saying, no, I would not collect it. They've stayed so long. If you are returning to me and I'll return it back to whoever sold it to me, or he has paid for them already. So you return those goods immediately and then you record them in your return day book so that you will not argue with Mr. Adamu. Mr. Adamu will not say, no, it's 9, you're saying it's 10. No. Because you have a record of them, you've counted them, you're certain. Because every dollar and every number counts. Because that number is what is translated into sales, into Naira and Kobo. So if you make mistake with your record, you make mistake with your numbers, you're making mistake with your profits. So you must be very, 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 very what? Careful. Are we together? Now, what is the format of your purchase day book? Just like your sales return day book, your purchase return day book is the same thing. But what you'll be having in particular, instead of name of customer, you'll be having what? Name of supplier. Because that's the person you're returning the goods to. So the same thing like your sales return day book, where you have sale dates, particulars, credit notes, an amount, and remark. You would have dates, particulars, debit note instead of credit note this time, amount, and remarks. Are we together? Now, under the date, you're going to write the date the transaction took place. So, if I say I bought those goods from Adamu, say on the 11th of February. On the 11th of February, I bought 10,000 pampers. And that same 11th, I noticed that 1,000 were defective. So, in my purchase return the book, I will have date 11 February 2025, Under my particulars, I will have what? Supplier's name. Mr. Adamu. So I'll have his name. I will now have the details. That is the record, the number of what I'm returning to him. 1,000 pampers times 10,000. That is the cost at which I purchased them from. And that is what? 10 million naira. Now, this 10 million naira will be under my amount. And then I'll put my naira sign to define that the currency is in naira. And then under remark, I'll write the reason for why I'm returning the product. Defective pampers. Large, the quantity of pampers, yes, the quantity of cotton product in the pampers is reduced or is below standard. Also, the latch, the sticker in the pampers aren't sticking. So anybody reading this, okay, this is the reason why I returned this product. And even if Mr. Adamu begins to argue with you, you tell him the reason why you're returning, because Mr. Adamu is expecting that he has made a profit from you. So you must write the reason why you're returning this product to Mr. Adamu. Now, this return day book is you that is keeping it, not Mr. Adamu keeping it. What Mr. Adamu will have is a sales return day book. You have a what? A purchase return day book, because you purchased them from Mr. Adamu, and because you want to keep record of your transaction, because you want to account for the profit, because you want to know, am I really making profit or not? You are recording your transaction. Everything that has to do with your business must be recorded. Every activity, as long as it has to do with your stock, you must record it. And so that's why I'm recording this product in our purchase return day book. So this is the summary of your purchase return day book, and this is why you must record every transaction that you return so that you can account for your liabilities. You can't say you're owing Mr. Adamu 100 million while in the race you're owing him what? 90 million. If you keep accurate record, you will know you're owing him what? 90 million, not 100 million. But without a record of those transactions, Mr. Adamu will query you and you and him will keep arguing. But if the record is there, you will show him, see it though. Plus the debit note you will now use and show him and say, see, I received 100, 10,000 papa, but 1,000 is, and record is here, it's clear. You know, the good thing about accounts is that once you have your records, everybody will see it. The evidence is there. There is no need for arguments. And you're able to account for how much liability you're owing Mr. Adamu. So I hope we are getting value for our time. And I believe you have learned today how to keep record of your goods you have need to return to your supplier. Always record them. Don't keep them in your head. You forget them. But to have a record of them is clearly stated. And it can be seen by everybody. Mr. Adamu will say, okay, yes, this is the dates that you return them. Because when you return them, you give it to him. You show him, he will see, he will confirm that actually, yes, it is true. So, I'll be stopping here for today's class. I don't want this video to be so long. I believe you've had value for your time. See you in my next video. And if you've not watched the video on sales return day book, please look at it. You would know why your customer always return your goods that you sell to them. There's a reason why you've made a sales. And instead of that sales becoming actual sales, the person comes back and says, give me back my product, and collects his money. You've lost. So you must ensure that the products you keep on your shelf are of good quality and good standard. Go and watch that video so you can learn. You can be empowered. You can keep accurate record. And you can know how to make accurate profit without making losses. Most people make losses in their business because of all these little things. They don't keep record. If you ask them, how many goods have you sold today? I sold 5 in the morning, and I sold 2 last night, and I sold 3 day before yesterday. Where is it written down? It's possible that you sold more than those products, but you're saying what you can remember. But if you write it down, it's clear. And that is why you must keep accurate record of all your transactions for you to be able to account and say, yes, am I actually making profit? It's not just that you're selling. Am I selling right? Am I selling the right quantity? Am I calculating it properly? Are there mistakes in my calculation? These are the loopholes. These are where people make losses without knowing, and they assume because they made a sales of 1,000 products, they have made profits. The price you're selling your product, is that the price at which you're able to cover your cost and make real profits? These are the questions you ask yourself before you fix a price for your sales. So I'll be stopping here. Don't forget to share, like, and subscribe.